Eric Padden once again, and thanks again for taking a look at my video. This time we're going to be talking about, is silver and gold in a bubble? You're hearing a lot of talk now about the recent run-up in gold, which has gone up about 28% in the last 12 months, and silver, which of course has gone up well over 100%, that they might be in a bubble. And I'm going to address that from, let's look at the historical perspective on the physical, silver and gold ratios, and we'll talk a little bit about how I believe that maybe gold and silver are in a bubble, and I think it's the very, very, very beginning of a bubble. And so first, let's look at some of the other bubbles that have happened in recent times. And I believe these bubbles happen by design. It's a result of the Fed's, kind of excess liquidity when they pump all this money into the market. What happens is that money has to find somewhere to go, and so it'll find a market. And a lot of times nowadays, I think they know ahead of time where they're creating these bubbles, and the puppeteers above that pull the strings and pay off the politicians through lobbyists and get the rules and laws bent to where they can kind of legally rip everybody off, all in the name of profits. That's a whole nother video, but the bottom line is they create these bubbles and they make billions of dollars, and of course the average Joe usually loses everything. And so you can look at the dot-com bubble that happened, and there was a nice little run-up, and that went on for years. You can look at the real estate bubble, and that also went on for years. And I think this is also the very beginning of a commodities bubble that I don't know if it's going to go on for years, but certainly there's a long ways to go. And specifically in the case of, say, silver, there's a lot of factors that you can consider when you look at this. But I think let's look physically at the ratio of silver and gold that's out there. And in my other videos, I've talked about how often you can go back to about a 10, 12, 16 to 1 ratio between gold and silver, historically, meaning that it would take 10, 12, 16 ounces of silver to buy 1 ounce of gold. And throughout time, that's always kind of ranged and often has reflected the physical silver and gold that's above ground. And we've talked before in my other videos, so maybe looking at, say, 1950 as a measuring stick. In 1950, you had roughly 10 billion ounces of silver above ground and only maybe a billion ounces of gold. Okay, so at that time, a 10 to 1 ratio was justified because of the actual physical ratio. You were looking at 10 ounces of silver for every 1 ounce of gold, and therefore it was logical that gold should be about 10 times as valuable, right? Now, what's happening today is just completely out of whack. Today, first let's look at the physical. Physical, you've got about currently less than a billion ounces of silver. You remember that 10 billion ounces of silver we had in 1950? Well, it's been being, kind of used up industrially, and it's down to now maybe a little over a billion ounces. Some people estimate it's lower than that. Some people believe that there's a lot of paper silver out there being created that doesn't even exist, digital paper, phantom silver as I like to call it. But you can hear most estimates will tell you 500 on the lower, 500 million on the low end, 700 million. I'm just going to say, let's give them the benefit of the doubt. Let's say that there's a billion ounces of physical silver above ground. Now compare that to gold. Remember that gold that in 1950 there was only about a billion ounces? Well, because gold is mined and hoarded and put away in the form of government stored away. You've also got a lot of jewelry out there, and so basically it's hoarded. It's not used up industrially like silver is, and so it's gone from that billion it was in, say, 1950 to around 7 billion ounces above ground. And so look at that for a moment and look at the opportunity that exists in silver, because we've gone from a 10 to 1 ratio in 1950 where there were literally 10 ounces of silver for every 1 ounce of gold, and therefore value-wise, the gold would be more expensive than the silver, right? What happens in today's world is because the silver is being used up as an industrial metal, and more people are now looking at silver as a way to preserve wealth and hedge against inflation. So you're looking now at a situation where it's reversed, and now you've got about 7 billion ounces of gold above ground, okay, and only about maybe a billion of silver. So you're looking at about a 7 to 1 ratio. Now compare that to the value on the planet right now, which is about 40 to 1 as we speak. You're looking at about $37 an ounce silver here in March of 2011, and yet gold is about 1,439. So it's maybe a 40 to 1 ratio right now. So interestingly enough, that has created what I think is an incredible opportunity in silver particularly. Now it's my belief that all this nervous money all around the world, remember there's more money out there than there's ever been in the history of mankind. Not just dollars, but money all over the world. They're all on the same types of, fiat currencies, where they just basically create this money out of thin air. And what that does is, of course, it devalues the currency that's out there. And so there's more and more and more money out there looking for a safe place to hide when, it gets scared. And that's usually, historically, as the fiat currencies go down in value and eventually crash. And remember, it's not if, it's when. There is not a debt-based fiat currency that has ever survived long term. They all crash eventually. About every 40 years or so, there's a new monetary system on the planet. Okay, and I believe that we're coming to the end of this dollar, fiat system that we're in now, because there comes a point where no matter how much money you create, you simply cannot afford to pay the interest on the existing debt. And that's what we've been doing for years, is using the new debt to pay off the old debt, new debt to pay off the old debt. You might have heard they just had to raise the debt ceiling again to continue the cycle. But eventually people catch on, and the Chinese have already caught on. Chinese are now trading with Russia for oil, and even though the dollar is the international currency and the reserve currency, and supposedly you have to buy your commodities in dollars, which is the main reason all these other countries have been forced to hold dollars. Well, if China says, I don't think that they're going to be able to pay us for this, forget that. Let's just go ahead and, you and I, saying between Russia and Iran and these other countries, that they're now cutting out the dollar. And they're saying, hey, you can say you're the reserve currency, but we don't believe that your dollar's worth anything, and we think it's going to be worthless soon. We're going to just trade in our own currencies. So as this happens, and more countries lose faith in the dollar, they print more and more of it because they're forced to print more to buy the treasury bills and the bonds that fund our economy. What this does is it just creates a situation where your dollars are worth less and less. And so I believe that that's what's going to create this bubble of not only silver and gold, but just commodities in general. And you're going to see, just like you saw in the .com and just like you saw in the real estate, a bubble that is going to blow up the silver and gold. And I think you're going to see that gold going up and silver bridging that gap. And so if you're fortunate, if you can get in and hold physical silver, and I highly recommend physical. You might be aware in 2008, when we had the little mini crash there, what happened was you could get on the internet and you could buy ETF SLV paper silver as low as $9 an ounce. And yet if you were trying to get physical silver on eBay, a Silver Eagle was running you about $37, $35 an ounce. And so what's wrong with that picture? You've got $9 silver if you're willing to take paper, which the reason it's $9 is there's no real silver behind it. Okay, and then if you want to hold it, physical silver that you know is yours, that you know you've got, you're paying a big premium of $35 as high as $37. So that tells you people are becoming aware, and now that it's been exposed, JP Morgan and HSBC have been manipulating the precious metals down for years by creating through their ETFs millions and millions of ounces of phantom silver and gold. So that's what's happening. The awareness level, the economy, people are becoming aware now that these fiat currencies are basically going to become worthless. And so that's going to help create this incredible bubble. And yes, I do believe it's a bubble, and my strategy is to ride the wave. Okay, some of us were fortunate we were able to do well in the .coms. Not everybody got out in time. Some of us did well in real estate, but not everybody got out in time. You can bet the billionaires that are creating these bubbles have their exit strategies, and they're going to get out at the right time. So you have to have you can't wait and be part of the cattle watching the media, because then it's too late. You have to have a strategy going in. So yes, I believe it's a bubble. Yes, I believe there's a long ways to go before that bubble's going to pop. Ride the wave. Get yourself some silver and gold. I'm going to go when it goes from the current 40-to-1 ratio and my silver reaches about 10-to-1. That's when I'm going to exit into maybe some real estate, maybe other commodities, maybe even a new currency at that time. But I want to go into that new economy in a position of strength. And I think that you should be possessing, physical silver yourself to preserve your wealth and your purchasing power. So if you'd like to learn more about how to go ahead and start collecting bullion yourself, whether you just want to get a roll or two of regular bullion, whether you want to collect the collectible non-declarable coins so you don't have to turn them in if there's ever a recall, feel free to give me a call and we can discuss your situation. Basically, for my friends and family and my teammates in my business with ISN, I'll sell you the bullion basically at cost, and then one of these coins shipped out to you on auto ship every month will help you build your business and build a nice residual income. So if you'd like to learn more, give me a call, 858-705-2487. It's Eric Patton. If you want to check out my blog, there's a lot of great articles and videos on there, and you can learn more about anything that has to do with the economy, the opportunity. That would be isncoinsbusiness.com. Once again, Eric Patton. Give me a call at 858-705-2487, or jump on the blog and take a look at isncoinsbusiness.com. and give me some feedback. Let me know what you think, and I'd love to chat with you. And if you want to work together, I'd love to work with you. But either way, make sure and start converting your paper money into silver and ride this bubble while you can, and then exit at the right time, and you're going to put yourself in a much better position moving forward into the new economy. Thanks again for your time, and have a great day. I'll catch up with you on the next video.